Are semiconductors electrified? Today, a case study on the semiconductor index, the SOX, and welcome to Power Charting. I'm your host, Bruce Frazier. First, we're going to do a stock market update because today was a very interesting day in the stock market. Not a good day, but we will look more closely at this. And the whole idea behind doing these case studies is really to elevate our game, to become better at doing Wyckoff, what he called tape reading, which is chart analysis. Let's go dig in to these great case studies that are current to today, really understand them at a very intimate level. And then as time goes on and we do more of these case studies, we'll get into ever greater detail and become ever more masterful at this incredible process. And let me remind you, from last week, we talked about the great philosopher Yogi Berra. And Yogi said you can observe a lot just by watching. Well, that's the case with stock charts, is that you can observe a lot about where the market is, the present position of the market, and the likely future direction of stock prices from that very effective analysis. So let's get started. And we want to go into the current stock market first. But let me tell you about Your Daily 5 that I did, published broadcast yesterday on big base investing. This is one of the really fun things that I like to do, which is to search for really large, really big bases that can turn into uptrends that can go for years and years. And this is something that I like to do. I don't talk as much about it as I should. Here is the case study that I did a week ago on power charting. This is a big base. And so here you can see in the case of Microsoft that this base goes from 2000 all the way really over to 2012, 2013. We picked up this right here in my blog. You can read that blog from 2016, and this was an incredible advance. So go check that out. Okay, and let me tell you about an upcoming open door session to the Wyckoff market discussion, very popular thing that Roman Bogomazov and I do, which is to have this weekly Wyckoff market discussion, which is on Wednesdays at 3 p.m. Pacific time, April 5th. You're all invited, and I would love it if you came. Please join us, register at wyckoffanalytics.com, absolutely free to attend. We'll have a special offer for those that are interested in attending every week. And otherwise, we don't share your information at all with anybody. So please feel free to join us, and we'll have a good time and cover all of the important markets at that time. The NASDAQ 100, current position of the market. This was updated through midday today, March 9th, which is the day I'm recording. And here is the downward stride of this right here, of this bear market. The high, which was November, and then this point and this point gave us the downward stride, and some very important things happened along the way. First of all, we had an oversold condition below the oversold trend line, which is the parallel line taken off the midpoint of these two highs. And notice how well it works. Gives us really good oversolds and becomes quite oversold near the selling climax low, and then has a preliminary support, we call it, with a rally. This is like an automatic rally, and in some cases you could debate whether one is selling climax or preliminary support, but we draw resistance here across this area, and look at where we came very close on the NASDAQ 100 to fulfilling that count objective. Not a count objective, well, it was actually, but the got up to this resistance area, did not reach it, and then corrected off of that area. We talked about this in the past. This is really important resistance across these two zones. And it did not get above the lower resistance. And I really wanted to see it get above the upper resistance, which is the August high. And in fact, the inability to do that and climax before reaching resistance here is a sign of weakness in my mind, that especially in the NASDAQ 100, that the internals are not that good. And that's largely because of the super large cap, mega cap stocks that dominate this index. But you can see selling climax, draw horizontal lines, support, here and here, higher low, produced a really good rally. But then off of this, instead of having a backup that was narrow, shallow, brief, and then taking off again, it's dipped back all the way to the long-term 200-day moving average, touched it here, now showing weakness today. So this is an interesting circumstance. Let's move on, look at another example here, and that is the Dow Jones. Dow Jones was interesting because off the October low, it was the first to move up. It moved up very sharply. It was able to get above the August peak, which was not something that the NASDAQ 100 was capable of doing. It got above it, it climbed above the 200-day, it climbed above the downtrend channel, and then paused. And I was hopeful that this could turn into a backup. This could be a sign of strength, but I did not label it a sign of strength because it didn't spend enough time up here. Should have gone more through the August high and then held at the area of the August high while it was stalling here. But in fact, what happened was it corrected back down into the structure, and now look where it is. Today was a very nasty day. It closed down more than 500 points at the end of the day. Here down 445. But here's the resistance from the June high, preliminary support, June high, very important resistance area, and it is below that now. This trading range here, let's pay attention to this for a minute. Here, a lot of supply coming in here and lesser so here, but the rally that occurred after touching the support determined by the December low has produced a rally that is not a good rally. Very low quality, brief, 3-4 days up, and then immediately reverses off this resistance level and is back down through this low and back below the high or resistance defining the trading range. So the worry that we have, the concern as it rests here on the 200-day, is that it can keep sinking down into the area of this trading range. And I like to say it's very important that we understand that there is no edge in trading in the middle of a trading range. And in fact, we get up to the area of resistance, and this actually constitutes pretty high risk. And in fact, it rejected this area and has come back down and is now in no man's land. Here, preliminary support, you can draw a support line across this area. That could be an area where this market could go, which would be pretty far down from where we are at this time. Okay, let's move on. We have a lot more to do in the time we have left. The NASDAQ composite is, this is a chart you've seen before. This is the stride of the advance, which was defined in 2010, 2011. This is a reverse use of trend lines. Primary trend line is drawn over the market. Note all the touches, lots of touches all the way through here. Big climactic buying area where it throws over the channel post-COVID and then fails back in. Look at this distribution, really a classic distributional structure, fails back into the channel, falls right back to the bottom of it, and now is riding along the parallel oversold line. Now, the reason I show you this chart is because this is such an important area technically in the market, because if this is a redistribution, preparing for another leg down. This would take us down and out of the upward stride of the secular advance that has been in place for more than 10 years. Quite a remarkable advance. If it fails out of here with a tight money timing, a hostile Fed, and starts to go down, we could have another leg down of significance. So this area is one to watch really closely. And my preference, nobody gives me a vote. My preference would be to see what it's done here in 2018, 2020, which is to turn up off of this oversold area and rally back up into the channel. It appears to want to do that. So we will root for it to do that, but we're going to be absolutely clear-eyed in our analysis and let the market tell us where it wants to go and not have an opinion. We're just going to go with the flow of what the market wants to tell us where it wants to go. Ignore these notes. These notes are things that I put up over time. Also, just look at this relative strength area right here. This is incredible climax of relative strength, total blow off of the NASDAQ composite growth stocks, and then a monstrous reversal rotation away from growth and towards more blue chip type stocks. So here, an important bounce off of this lower trend channel. This is just a remarkable picture in my mind. Okay, got to keep going. Something big that happened today, but had been signaled all along. And of course, I'm using up all my time here, but I will just make a few brief comments. This is regional banks, very important. Regional banks, their ability to show strength in the stock market is a reflection of strength in the economy. And here we have what appears to be a distributional structure that goes back to early 2021. So we have a buying climax, automatic reaction, upthrusting action here and here, which immediately is reversed back down into this area, which is not a good sign. Note, this decline is less in duration and extent than this decline. We watch for things like that. And so this tells us that this is a index or an ETF that is under distribution, is for sale, huge amounts of volume off the peak, very distributional tip off right there. And then a series of rallies, and they are not good quality. This rally here in mid-2022 is better, but does not get up to resistance. This rally is not as good as this one. This rally is about comparable to the prior two, but now look what's happened, and today had a shattering decline through support on some bad news related to some regional banks. I'll let you look at that on your own time, but this is a massive break off of a downtrending channel. Here's our overarching supply line, up thrusting at the end and then failing. And now it's below support. So one to watch closely, relative strength. Here is a big tip off. This up thrusting new high right here, beginning of 22, is met with relative strength that is below the high that was made in early 21, upside non-confirmation. And now you can see also that this rally here only matches, doesn't quite get to the early 21 rally, rejects off of this area, and now it's below its long-term moving average. Okay, let's get into our case study in the time that we have left. This is the SOX Semiconductor Index, a very interesting case study. And we're looking here at the bear market stride of 22-23. And this decline, which is off of this point here and this point here, let me use my pen, sets the stride. Intervening low is the parallel line. We always draw the parallel with a dotted line. Note the stride, an attempt to rally above here and then down to a low, but note this low and this low do not achieve the lower boundaries of the downward stride of the channel. But there are some very important things going on here because we want to compare this to the NASDAQ comp. NASDAQ comp, we set the downward stride in roughly the same places. And here you can see that looking closely, and this is one of the things that we get really good at as we develop mastery, is that this high right here is higher than these peaks. And so this is up thrusting this prior peak here in a range bound condition. This one, this peak does not go up to this one and is internally weaker than the comp itself. And that is something to very much note, especially for people that are short sellers. And if you are long semiconductors, this is telling you that this theme is weaker than the comp. And note that the relative strength also points this out because it makes a lower high here than here. Then this decline is substantial in the NASDAQ comp down to the oversold condition, bottom of the channel. So oversold, it rallies off of this level, beautiful. I mean, doing Wyckoff trend analysis is just the best. There's nothing better than this approach. It oversold here, and then it rallies very sharply into the August high. But the semiconductors tell us something different. The semiconductors do not get down to the lower channel line here or here, and that is a positive sign. So the rally that occurs here that takes us up and out of the downward stride, which is also the case here, says that the semiconductors are starting to act better, more consistent with the NASDAQ comp. The next decline that we get is very weak in both of these. It's long, protracted, weak throughout, all the way back down, and goes through the oversold selling climax area, which I have here. This is selling climax, and we expect that to be good support. In fact, it spends time about a month under that level, but then cannot get follow through and turns back up into the structure. We immediately, as Wyckofians, are thinking potential accumulation, or even worst case, a redistribution, which could take a period of time to unfold. Now, look at what happens from here. This is so interesting. So in mid-October, the relative strength makes a new low between the SOX and the comp. And so this means that the SOX is weaker overall than the NASDAQ comp throughout this whole period. And we do not want to get in front of a weak relative strength structure, and downward it goes. But then something interesting happens. This rallies back up into the structure, has a test here, and then goes up into the midpoint of the trading range. Not the case with the NASDAQ composite, which is staying in the bottom half of its trading area, and only here is it able to demonstrate any strength that takes it only to the midpoint of the trading range, and that's as high as we've gotten. And this also is the high of this peak over here. And so this is, as we said, with the in the case of the NASDAQ 100, the fact that it was unable to make it above this level here is a sign of weakness internally. And so here, though, with the semiconductors all the way back up to the August high, only the Dow's been able to do that. The semiconductors internally have become very, very strong, and they're acting much, much better. Note the higher low compared to the low here. This low is made below the support area. This low is made above the support area. And then the rally that follows is to take this up to this very important area. And note though, something important that's happening here. I'm going to show it to you on another chart, but in the meantime, do note that this, and this are all, these are all either distribution at the top, redistribution on the way down. So we want to count those point figures. And here we are. I'm showing you here, this turquoise area is a reaccumulation that counts right back up to the highs again. But then we have this very compact distribution area, which counts down to 2100 to 2000. And this is 50-point scaling. Then here are our redistributions. I tend to be conservative when I count redistribution. So here from this high, which is the last high in the structure, over to the prior high is where I've counted to. It confirms and matches the distribution count. Then we have a smaller distribution count, and it pretty much matches the redistribution, the prior one in red. So all of these are nesting in the area of the important low. We can draw trend lines on the point and figure charts. We draw them on two adjacent highs and the intervening low, gives us a channel, throws under twice. Beautiful. These are oversold conditions, and we can attempt to purchase a reversal back up into these channels from an oversold condition. And in fact, this whole area may prove to be a larger accumulation for a much bigger move. And we will be keeping an eye on that. We're not really up and out. We don't have a finished structure yet. So I'm not inclined to, because there's a lot of resistance right here, I'm not inclined yet to try to count this until we see whether there's more count. But you could count this to here or this to here and get some kind of a swing count along the way. All right. Now, here's zooming in. We have a 3 or so minutes left. And let me just finish on this chart. Now, I want to show you, this was a very important decline. This decline went down about 50% in the semiconductor index. And I've blown this up so we could take a closer look at the downtrend itself. And I put that distribution point and figure count in so you could see where it went to. And it went exactly to that sort of a climax low at 2100. So great count off the top. And I would make one other point here, and that is that this count potentially could be made larger, a larger distribution type count, also the case for the NDX, which we may have to consider if that big secular uptrend area is broken down out of. We're going to start counting these larger distributions. So keep that in mind. Okay, here we go. So this is a log scale chart, and I want you to note that in a log scale chart, we normally don't use them for daily. But I would contend that when you have a 50% decline or a 50% advance on a daily chart in a short period of time in an important index, stock, etc., that you want to look at the log scale, not so much on trading ranges, but definitely on trends. So note how this really illuminates other possibilities on this chart. Look at the downtrending overarching supply line. Throws over, as we saw prior here in August, and then it throws above in the conclusion. But remember how on the arithmetic scale, the decline did not get to the oversold line. In both these cases, it not only gets to, in the log scale, gets to the oversold, but goes through it into an oversold condition and signals a reversal, would signal an opportunity to trade in the reverse direction. Both of these rallies are exceptionally good swing trading rallies. And I also shaded them in yellow because not only did they throw under, but these are beautiful swing trading setups here and here. that you could trade. You could count on a one box point and figure and trade for a more important move up. So the other thing that I see here, 56 seconds left. So let me just make a couple of key points. I labeled this for you so that you could see. And finally is that after this minor sign of strength, it pulls back to the supply trend line from above and holds it. You don't see that on the arithmetic scale trend line. And then a really good rally up to the sign of strength area. Now, this is a very important place on this chart because this automatic rally point is exactly where SOX has rallied to and could very well find resistance at this level. And so take a closer look at the relative strength here. And I want to thank you for attending. Let me know. I'm getting lots of positive feedback on doing these case studies. Let's do more of them if you like them. And we will see you next time on Power Charting.